I'm Joe Scarano from Arrays. In a previous blog, we explained what net assets are on a nonprofit's statement of financial position, or balance sheet, and what they represent. But what about the rest of the statement? Today we will cover how to read and interpret a statement of financial position and tell if a nonprofit is healthy financially. The statement of financial position provides an overview of what an organization is worth. It is broken down into three categories: assets, liabilities, and net assets. The assets section is categorized by current, fixed, and other assets. Current assets contain cash, investments, accounts receivable, and prepaid expenses. Fixed assets contain buildings, vehicles, furniture, and large equipment, and their accumulated depreciation, which helps you determine the net value of your fixed assets. And other assets, which include long-term receivables. The liability section is also categorized by current and long-term liabilities. Current liabilities contain your payables, accrued expenses, payroll tax liabilities, and short-term loans. Long-term liabilities contain the long-term payables, such as mortgages or loans. Essentially, assets are what your organization owns, and liabilities are what your organization owes. And the difference between your assets and liabilities are your net assets, or the net worth of your organization. The net asset amount is also calculated by the cumulative difference between revenue and expenses over the course of your organization's life. But the nature of nonprofit revenue requires that revenue be classified as either unrestricted or with donor restrictions or designations. So the net assets section of your statement of financial position will have unrestricted net assets, or funds that can be used for the general benefit of your organization, and designated net assets, which are funds that must be used in compliance with the restrictions placed on the revenue by the donor. So when reading a statement of financial position, a healthy nonprofit will have assets that are greater than their liabilities, and their net assets will have a large surplus to be used to achieve its goals in the future. As a nonprofit, your mission is your main goal. However, a net asset surplus is key to the growth and sustainability of your organization. Don't forget to subscribe to our YouTube channel to learn more about nonprofit accounting and financial management. Thanks.